Good morning, good afternoon, and good evening, friends. It's really happy that we are going live with this class. And let me know if in this live streaming so that I can correct it next time. Let's continue with this with the class on accounting for incomplete records. So I'm in page 17 of accountancy class 12 book. Statement of affairs, as we were discussing in our earlier classes, is prepared bases the assets and liabilities what is there from the memory or from the incomplete records what the partner or sole proprietor or the owner of the business has got. Basically, statement of affairs is prepared to identify what is the capital left over in the business, right? Capital is equal to assets minus liabilities. Let's get into the details of format of statement of affairs. A statement of affairs format looks pretty much simple, something like a balance sheet. Format of statement of affairs. This is probably one of the easiest form of accounting, however, not the robust form of accounting because it does not capture all the requisites for a proper accounting system. Right? Statement of affairs as on. As on some particular date in the books of some company. Okay, so it's let's put it liabilities amount, assets amount. What are all the assets liabilities that will come in? Sundry creditors. Let me make some space here for everyone to understand. I'm putting it in a tabular form so that it is easy to understand. I'm putting a table here. I'm putting it. Okay, this is clear now. We have put it in a format. Sundry creditors. Then what are all things that will come in the liability side? Bank overdraft, and bills payable. Bills payable. And what are all things that can come in the asset side? Land and buildings, plant, machinery, furniture, and other assets, right? Bank, bank balance, cash in hand, sundry debtors, bills receivable, etc. And closing stock. Closing stock, etc. And the total on the side, total on the asset side exceeding the liability side is capital. This is balancing figure. This is balancing figure. So this is how a statement of affairs looks. So let's try and solve some of the problems what we have, and then we'll go into the exercises also. But we'll try and solve some of the problems that we have in the illustration first. Okay. From the following balances of Shanti as on 31st December 2018, prepare the statement of affairs as on 31st December and calculate the capital as on that date. So we have the format available here. Let's copy the format for, for easy reference. Right? I'm copying. So this is the sum what we are working on. I'm highlighting it for the reference of students. Now we have the format available in front of us. Right? Let's start putting it. Bills receivable 6,000 rupees. Bills receivable 6,000. Right? Bills payable 4,000. Bills payable 4,000. Then machinery 60,000. Machinery 60,000. Then furniture 10,000. Furniture 10,000. And sundry creditors 25,000. 25,000. Then we have stock 45,000. 45,000. Then we have debtors 70,000. Debtors 70,000. And we have cash 4,000. Cash 4,000. Calculate the capital. So the total of asset side, total of asset side 1,95,000. Total on the liability side 29,000. So capital is equal to asset side assets minus liabilities 1,95,000 minus 29,000. So capital is 1,66,000, which is the balancing figure in this case. So hope the students understand this. Right? Let's get into the next one. Let's get into the next sum. Okay, while we are in this, why can't we discuss about what is the difference between a statement of affairs and a balance sheet? Both looks in the same form, right? But balance sheet is prepared basis the double entry system, and statement of affairs is prepared basis the uncleaned records what is maintained, and balance sheet is supported by all the journal entries and ledgers. Ledger balances move into the balance sheet. Whereas statement of affairs is sometimes prepared based on the memory of the person who is owning it, right? And it is not fully based in the ledger balances. And balance sheet is a reliable document prepared under the double entry system, as we discussed. It's a reliable document even for uh, financial uh, health of the business, right? And but in case of an statement of affairs, it is not reliable, and it is based on the incomplete records, right? So since the balance sheet is prepared basis the double entry system, and also basis the original proof of documents, the balances both the aspects of transactions are recorded, like debits and credits will be there. For all the debits, there will be an equal and corresponding credits that will be available, but it will be, and the origin of the transaction can be traced using the journal entries. But in case of statement of affairs, because it is incomplete records, it is very difficult to trace the origin of the transaction. In a clean accounting environment, base documents or the origin of the transaction plays a major and pivotal role in ascertaining the financial health of a business. So that is not available in case of a statement of affairs. Okay, let's get into the next illustration on illustration 7. Right, I'm copying this for the reference of students. That copying this and highlighting this. We are in illustration 7, and I'm in page number 19. Page number 19. Okay, now on 1st April 2017, Ganesh started his business with a capital of 75,000. He did not maintain proper books of accounts. Following particulars are available from his books on as on 31/3/2018. Let's copy the format again, friends. This format is going to be useful for us to prepare. Right? I'm deleting the existing numbers here. Delete the numbers here. Cash 5,000. Cash 5,000. Stock of goods 18,000. 18,000. And bills receivable 7,000. Bills receivable 7,000. Furniture 3,000. Furniture 3,000. Then land and buildings 30,000. Land and buildings 30,000. Then debtors 16,000. Debtors, sundry debtors 16,000. Then we have creditors 9,000. Sundry creditors 9,000. Cash at bank 24,000. Cash at bank 24,000. Bank balance is 24,000. And bills payable 6,000. Bills payable 6,000. So the balance in the asset side is 1,03,000 and the liability side is 15,000. So the capital is equal to 1,03,000. Closing capital is equal to 1,03,000 minus 15,000. So 88,000 is the capital, which is the balancing figure. Hope the students are following this. Let's get into one more interesting one as we progress. Illustration 8. David does not keep proper books of accounts. Following details are given from his records. Copying I'm copying the format here. Students, understand the format makes a major role in your examinations. So the format has to be followed. I'm in illustration 8 now and page number 20. Page number 20. As usual, I am removing. Okay, let's continue in this next class. I just want your feedback on how this live streaming is, and then let me know your feedback. Thank you.